How are you all doing? Hope you've had a good day or a good morning or wherever you are. So what I thought I'd do is last time I was a bit rushed in having a look at the market geometry. So I thought this time I would just go over it again and probably maybe point out a few other things that I didn't last time. So where shall we start? So really, what are we trying to achieve with market geometry? Well, with market geometry, we're trying to predict a place in the future where we're going to find support and resistance. So we can use pitchforks, we can use trend channels, we can use whatever tools we've got at our disposal to try and predict these places in the future. All right. So what I do is probably for the most part I use pitchforks where I can. Now, is everyone happy with the different types of pitchforks? I talked about them last time, or do you guys want a quick rundown on them again? You want me to talk about them briefly again, or are you happy with what they are? All right, well, you guys can see my screen. I've basically got up a standard pitchfork on my chart. So what is a pitchfork? Well, basically a pitchfork is where you're drawing from an A to a B to a C. So, for example, in this downtrend, in this particular case, I've chosen the high, then going down to the B, then to the C. Now, what that does is then with the pitchfork, it gives the median line, okay? Now, or the slope. Now, that's what I'm really trying to achieve in all of my market geometry. I'm trying to find the slope of the market, all right? So once I've got the slope of the market, I'm then trying to find what the current ceiling and floor is within that slope. And then once I've got that, then I'm trying to find the context within that slope. Is it moving up? Is it moving down? How is it moving within that slope? Does that make sense to everybody? All right. So on the chart here, you can see basically I've drawn in the A, B and C. So you can see this is normally how you would mark up a standard pitchfork. So this is really the tail of the pitchfork, and the central line is the median line or the angle of the market. And then basically every other line is really just a copy of that. And then it's giving you, I guess one of the reasons a lot of people use Andrew's pitchforks is because they're giving you like the, think of it like a sine wave, all right? So it's trying to give you the current ups and downs or momentum of the market, if you like. So in here, basically using that, you can see how we are moving in the trend. So what we then do is we then copy the median line. So when we copy those median lines, we then call them sliding parallels. What time frame do I start with? Well, when I come to my computer, I normally start from, in general, the higher time frames and then go to the lower time frames. But for most cases, if I've got the right trend or the angle on my charts, well then I really don't need to change them that much. So like for example, my daily, my 240, all the bigger time frame charts, once you've got that market geometry and the angle or the slope of the market and you've drawn in basically a copy of the angle and using them to find out basically the next possible ceiling or floor of the market, you shouldn't really need to change it that much. One of the problems with people and their drawing pitchforks is that they tend to discard them very quickly. So when someone might look at a pitchfork and say, all right, well, we've got the A, B and the C. All right, well, we've broken up on top of the pitchfork. So then they would totally disregard the pitchfork. Well, the way I look at it is a bit different. Well, if you've got the slope or the angle correctly, it's just giving you a slight change in behavior. All right. So then moving on, so then we've got another type. So we've got a shift pitchfork. So what does a shift pitchfork do? All it does is if you looked at the price from A to B, the A point moves down 50%. All right, so thereby changing the angle or the slope of the market. So then once you had that slope again, then you'd copy that median line and then try and see if that's giving you any relevant points. So for example, in here, you can see that sliding parallel then works with that particular slope just there. This pitchfork is a shift pitchfork. So a shift pitchfork moves 50% in price. So from the A point to the B point. Yeah. So some people like to call the upper parallels and lower parallels, but really at the end of the day, that's just giving you another copy of the point and a possible area of support and resistance that we're trying to find later on. So then moving on to a modified shift. Well, a modified shift is really where we've, same as the shift, all right, but now we move forward 50% in time. So you can see from A to B in the price, so price has moved 50%, and then we've shifted forward 50% in the time from A to B. Everyone happy with that? So it's just another projection or a possible angle of the market that we're looking for. So then what's the next slide I've got here for you is warning lines. All right. So a warning line is basically what people do is they copy basically the spread between like your B and the C, or so the actual midpoint, so the median line, and then they copy it out again. So then they actually put a midpoint in there as well. So it's just another area saying, all right, well, we're still moving in the direction of the market, but it's basically done a shift up or downwards. And this is a possible area of support and resistance coming into play. Yeah. So the next chart I've got for you is basically how do I decide the difference? Well, that's where this just comes with practice. So you'll come back and you'll draw it on the chart, right? So for example, you could draw in your A, B, and C, okay? And then you might move them around and try the different ones. So you'd double click on the chart to bring up the properties, and you would change it between the shift or the mod shift to see if the angle of the market is correct. Because remember, at the end of the day, what are we trying to achieve? We're trying to achieve what is the current slope of the market. So really we're using all the tools at our disposal to try and find out what that is. So that could be using a pitchfork, a trend channel, whatever method you've come up with, drawing from highs to lows to try and give you that angle of the market. Does that help a little bit? Okay. So in this example, I've used Dan's tools. So I've basically drawn in from point A to B down here. And then, so if we're using Dan's tools, just to clarify, we'd be using this one to actually give us the Andrews fork off it. So then basically then it gives us the standard pitchfork. So we're looking at our A, B, and then the C, and then it projects out for us. So then how Dan makes it even easier is then we can actually copy the angle or the slope of the market and then move that sliding parallel around to actually see if we've got the correct slope. Now, one thing I probably should bring up with the differences between shift and mod shift, I probably would say that for the most part, I would probably use mod shift more than shift. A shift fork is probably, yeah, it's rarely used. Yes, I am America. I'll post it up later tomorrow, my time, I guess. So yeah, so probably the ones that I use the most would be a standard pitchfork and the modified shift. And on the rare occasion, a pure shift fork. All right, so the next one on here is what I've done is I've drawn in a trend channel again using Dan's tools from A to B to then give us our standard pitchfork. So our A, B and C. But what I've also drawn on this chart is, for example, a standard trend channel using the standard Ninja trend channel, this one just here. So I drew this one from point A to point B. So you can see, yes, normally yes it is, Pep. So you can see in this example here, when we've used the channel in here, see how long it actually lasts for. So we can actually, if we actually drew in a copy of that line, you can actually see that it's actually made some good support and resistance points into the future, and that's really what we're trying to achieve. So whereas most people probably would have deleted the trend channel after we broke up above this point here, leaving it on a little bit further into the future would have given you a possible area of support once again, because you would have seen from the top, it actually hit the top of that trend line very nicely. Once, twice, 3 times, 4 times. Yeah, before then breaking back down. So you're probably asking, well, why would have I drawn on the other particular trend channel? Well, I always like to have a backup on the chart. So I've got my primary analysis and then I've got secondary analysis. So to be fair, I probably would not have drawn in this particular point A to B until we'd actually started coming down here. Because the way I like to think of it, and this is where I'll get into a little bit more later, is context and how we're looking at the market. So once we've got the slope, then how are we actually moving in that slope? Are we moving up to the same point, or are we moving down, or just to the same points again and again and again? So in this case here, why I would have drawn that in is because we actually failed to get up higher to where our previous area of resistance was. So as soon as we had that failure, then I would say, all right, well, we've had a failure. We've come back to test the lower channel line. All right, we've bounced off it. We've come back up. We've failed to actually go any higher. So now the market's actually saying, well, it's a slight change in behavior with that failure. So with that, I would draw on the trend channel. So what am I looking for? I'm looking for it to come back to, say, the median line. Because remember, most of the time when we draw in a pitchfork, it comes back to the median line 80% of the time. All right. So this would have given me a point as a possible target into the future of where the market could stop. All right. And then that also would tie in with, depending on how quickly this happened, you'd be looking to see whether other points actually lined up at the same time. So this is just another example, but this time we've got a previous trend, which was to the upside. All right, so we've been going up, we failed to make it to the upper side, we've broken down below, and then we've failed, and then the market's gone lower. So depending on how quickly you read the market would depend on how quickly you would draw in another pitchfork. So again, it comes back down to context and practice. All right? So in this particular case, I drew from point A to B to C copied the median line to then see if it gives me any particular points. So with this failure here and coming back up, personally I probably would have been waiting for a little bit higher for a short. But sometimes if you can't find the market or angle, it doesn't matter, just leave it, go to another chart. Sometimes I find leaving a chart and coming back to it at a later point in time, you actually see things more clearly at a later date. So then moving on to, in this example, I've drawn in just a standard trend channel. All right, so with this particular trend channel, I've put in from starting point A to B, and then it would have given you all the other points. So then I've copied the slope or the angle of the market, and then all I would do is then I would move that line around as I would do with any pitchfork or anything else. Once I've got that angle and I've copied the angle, I would move it around to then see if that angle is actually in play. Does that make sense to everybody? All right. So you can see in this example here, we've picked the right trend. So I picked this one fairly early on. So if you'd managed to pick this trend line early in the piece, all right, and copied it, it would have given you some good entry points to re-enter to go for a short. So how would you trade it? Well, as I alluded to last time, is I prefer to trade in the direction of the market. All right. So once you've got your slope in play, well, what am I finding? I'm trying to look for the appropriate ceiling and floor. So when I'd copied in this sliding parallel, so this would be my floor, and the upper trend line would have been my ceiling. So I'm basically looking to see how the market reacts between those two points. So you would have had a perfect touch here. I don't know how quick it was, but for example, if you had an order here and you had some confirmation from another chart, or if you're just using this purely by itself with market geometry, you could have had an order sitting here waiting as you saw the market come up quickly to that trend line, if you're quick enough. All right, so you could have had an order here and then basically then trailed it down. So you would have said, all right, well, my next target would have been down at the lower sliding parallel or the floor in this case. So the market then came up again, and then you could have had another order again if you're quick enough. I can't remember the time frame of this chart, so it's very difficult for me to tell whether it was a 4-hourly chart or things like that, because on the higher time frame, remember, you might only get one touch of the trend channel itself. So you'd have to break it down into your smaller time frame charts to actually see what was happening as you came up to this point. So if you're using just market geometry by itself, well, you'd say, all right, well, how would you, if you got in at that point, where could your protective stop be? So you could maybe place a stop behind the previous swing high. So depending on the time frame of chart, that may be within your risk-reward limit or it may not be. But for example, trying to go long down the bottom here, so if you're looking at this trend channel and he says, all right, well, I want to take a long trade back to the upside. Well, yes, it can work, but what happens with time? So as time progresses on, your target reduces. So time isn't your friend, all right? And where do you put your stop? So if I did a entry at the bottom of the trend channel down here, all right, where do you put your stop? The market could come down, touch that line, and then it could come down and touch it down here again, which quite often happens. All right, as you see here, so it's come down and then touched it again. So if you went into the market up here, you could see if it came down again, it would be very difficult to have stop placement. So if you were to trade against the trend, well, you've really just got to give yourself a cash stop. Now that's up to the individual how much the SD volumes. Sorry. So yeah, getting back to there. So if you were to get in down the bottom, you'd have to have a cash stop with the appropriate risk reward that you're after. So that may be 10 ticks, 20 ticks, whatever. But then you have to take that into consideration what your possible target would be. All right, so again here I've just shown the example where I've drawn in support. You can see how the angle of the market is working very well because our sliding parallel line has provided support, support, support. We've got resistance up the top, and then we just move the line around to find out what's happening. You guys are quiet. You're not asking me very much. What's going on? Or is it too much information? All right, okay. All right, so in the next chart, what I've done is I've tried to show an example of stepping up. So it could be stepping up or it could be stepping down in a particular trend channel. So as it says on the chart, when you're stepping up, for example, your resistance point on your particular slope turns into support. So even though you've moved out of your trend channel, okay, your particular market is actually still moving down in the angle of the market. All it's done is done a phase shift from one particular channel and moved itself up. How to get a shift? I'll show you in a minute, but if you draw a standard pitchfork on the chart, so you could just use this particular tool, draw in your A, B and a C, or an A, B, C, either direction, and then once you've drawn it, double click on it, and then that'll open up the NinjaTrader properties, and you should be able to change it between a standard pitchfork and a shift and a mod shift. Does that help, John? All right. So that's why if I actually find a slope or the trend of the market is working, I'm very hesitant to remove the slope until I've really got confirmation or I can draw in another trend channel. Whereas a lot of people just discard it and say, all right, well, I need to find something else. Just maybe leave it on there, or if you want to just leave in a sliding parallel line and see if it still works in your favor at a later date. So moving on to the next chart, what I've done is I've tried to tie everything together on one particular chart and how we'd look at things. So I've drawn in, starting at the left-hand side of the chart, we would have drawn in a channel from point A to B. All right. So then from that point, it then predicted into the future, all right, where you would find possible support again. All right. And up the top, I chose this particular point, but you may have chosen a lower point. But don't be afraid of changing that top point around, or the lower point, depending on which way you're drawing it, in a standard trend channel. But we're just looking to see the actual angle of the market. So if you're trading just purely off this, you could have maybe had an order waiting, as if you're watching it, down below at the lower trend line. But if you actually look very carefully here, this is probably a good example of where we're using Dan's tools to our favor. So we've had this sort of climax bar, weak climax, Jim, I think it is. I'm just trying to remember off the top of my head which one it is. It's the which one is it? It's the spike, I think, or week. So then it's basically come down and then it's actually broken that point. If you actually look on this chart here, it's actually just probably broken it to the tick by a tick or two, touched the bottom of the trend channel. So if you'd actually been looking, you might have had an entry waiting here, and then you could have had a stop. So there's no actually close swings here. If you'd used this one, you would have probably used a stop maybe 5 ticks below that swing. So you could have had your entry with a very tight stop behind it. So then you'd be saying, all right, well, where am I looking for this market to take me? All right, so you'd be looking for it to take you to the top of your trend channel. So in this case, you would have said, all right, well, I've taken order in here. I'd now be looking at reducing my position as I get closer to the top of the trend channel. So in this case here, it did break above and then it's come back and it's tried to test the lower end of the trend channel once again. All right, and then tried to move higher. Now this is the change in behavior. So what we've done is we spiked higher and we couldn't actually maintain it. So then what did we do? We actually then came back and instead of finding support on the bottom of the trend channel, it actually broke through it ever so slightly. And then when it comes back up, it actually does it and it actually can't make it to the other side of our trend line. So that there, if you can actually look at it, you'll see there's a gap. Some people call this a bearish gap. So this is our change in behavior. So once we've got this change in behavior, I would have probably drawn in point A to B in this other trend channel. Okay, so then trying to see if we can find if this is another new slope. So we're actually easing out of it. If you think of it, this is a fairly steep channel going up. So then we basically start to round out, if you think of it that way. So we're coming up, basically the angle of the market's changed, and then we've changed to a downtrending market or slope. So we could have drawn in this, then we would have had this extension. So our point in the future using our market geometry, where we'd be looking for possible support. But it doesn't mean that I wouldn't get rid of this previous trend channel. I would leave it on there until I get more confirmation of what's going on. So I would have copied my sliding parallel again and brought it to the bottom. Now, depending on how aggressive you are, you may have taken a trade here, and then you would have been saying, well, where is the next point on this chart that I would be looking at possible exits? Well, you could be looking at a possible exit at midpoint, or you could have copied the angle of the market with the sliding parallel through here and says, well, this is another area on the chart that you could have been looking for another exit on your position or to reduce your position overall. So then we came up. So again, if we're looking at the previous channel, you can see that we're still failing to go higher in this trend channel, this previous one. So because we're still failing to go higher, that's really telling us that the market's losing momentum to the upside. Yeah. So this is the type of things that I'm looking for. How are we doing in this slope? Are we moving up in the slope? Are we moving down in the slope? And in this case, we can't make it up any higher. So we've failed. So we're coming down. So saying, all right, well, there's even more weakness coming into the market. So then you might be looking, well, you wouldn't have drawn in this trend channel until later, but you could have then been looking at maybe another entry at the bottom of the trend channel down here. So because we still trade in the direction of the market. So the market was up here and all we did is change to a different slope in this blue pitchfork here. So then we could have still taken further trades. So if you did take a trade here, where we actually failed to meet the midpoint and this upper sliding parallel again is the turning point again to me where it's showing weakness. So then you start to say, well, can I draw in a pitchfork? Can I draw in a new channel? It's very early days, but I would probably, where I would really start is where we actually breached the bottom trend channel through here. Once we breach this line, again with that failure to go higher, or you could have taken an entry here, it depends on how aggressive you are with your trading, right? But I would have been very cautious through here, even failing to go higher before coming back to the trend channel line. You could have maybe tried again for another quick long trade, but you probably would have moved up your stop fairly quickly if you'd had it hiding behind this low, previous swing low. So once we break that, look what happens. We break it, then we come back up to test it. Now this is what we call the kiss goodbye. So we've broken out of the trend channel, and then we basically come up to test it again before then going down lower. Now sometimes you'll get a very quick kiss goodbye before moving down, and other times it could take a lot longer, excuse me, before the market comes back up and then tests that trend. I can't remember what time frame on this chart, but I've done lots of charts, so we'll be able to have a look at some live examples just in a little bit. I just wanted to go through what I'm looking at to try and help you get context to what I'm trying to explain later in all the different charts. Yeah, you happy with that? Or you want me to dive straight into charts? I'm almost finished on this anyway. This is the last couple of one. So in this example here, I could have drawn in a trend channel, and then I would have copied the angle or slope of the market to then try and give me particular points in the future that I would be looking for. So in this case here, you could have drawn in your sliding parallel, and you could have taken again your short trades to the downside. And then once we started to move up again, it's up to you. Remember I said you can always get trend channels within channels. So depending on how big a time frame you've got to, you might say, right, well, you've got a micro channel within the bigger channel. When it comes to Elliott wave and everything else, yes, I do apply that, but what I'm trying to do here is really just give you the concept of the market geometry, and that's where a lot of people fail, because they're saying, well, I'm drawing lines on a chart, but what does it mean? Where am I expected to find support and resistance in the future? So they're just drawing lines everywhere, and they're not really putting any context to the lines that they've drawn in the chart. All I'm trying to show you is the way that I trade, is that I draw my channels on the chart, whether it be through my pitchforks or trend channels or whatever. I then try and justify that angle of the market is working. Everyone happy with that? Yeah, I'm just about to get to them, Pat. So hang on, I think that was the last one that I was going to show you guys. So what we'll do is I'll just close this down, and we'll have a look at some of the market geometry that I did for earlier today. So let's have a look. So I will show you, I want this screen here. All right. Now, for those of you that were awake either late at night or in the morning, depending on where you live, I actually drew in this trend channel this morning, not long after I woke up. I was still doing my analysis and I actually posted this particular chart into HipChat. So what I had done is I had taken off this particular tick chart. I had drawn in from this low here, so that was my A point. And I'll just make it easy so you guys can see what I'm pointing at. Is that easier with a pointer now? So this was my starting point A, and then I moved it to B. So I used Dan's standard trend channel. All right. So I copied that in, and then I says, well, is this market working? So then I used his line copy tool. So I clicked on the R and then copied in my sliding parallel line to give me the slope or angle of the market that I was looking at to see whether it's in play. So then I copied it onto the chart, and in this case, it actually happened that it was at the same point as the midpoint. But I'm just trying to show you, but I also wanted to extend it out further into the future. So we came down. So what am I looking at? Well, I'm looking at this chart now and I'm saying, all right, well, where are we going in this market? All right. I think when I looked at it, we were around about here or here. I think we're just in here, I think, at this point here. So I looked at it and I says, all right, well, is the angle working? And that's my whole objective. Is the slope of the market working? So if I'd actually looked at it hard right edge, that's what I would have seen. And I says, all right, well, to me, it looks like it's abiding by the angle or the slope of the market. So the bottom trend channel found support once, twice. So then we copied it up. Now, the thing that I try and look for is I try and find lines that actually provide both support and resistance. They're the best type of trend lines that I like, that have been tested from both sides, because you truly know that that's a point in future that could be noteworthy to use. So in copying this here, we could see that the market was finding a nice little bit of support and then dropped below it, tested it from below, so then it was resistance. And then popped up above. We didn't quite get to the other side of the trend channel, but then we came down and we did a perfect touch on the lower trend line again. We then popped back up, and if you'd actually copied the trend line to here, it was very close to meeting the top of that trend channel there, but it was actually then came up and it was finding nice support on the midpoint. So this is, I'm looking at this, I'm going, all right, well, now what have we done? We've actually broken up above the top of the trend channel. This is my first warning sign. We've had slight bullish behavior come in. So we've shifted our low. So this was our previous support line. Now this particular line, our midpoint, is turning into our support line. So I'm almost expecting a phase shift. So if that has moved up by there, well, then I could almost predict that we're going to then move up to at least this point up here. So maybe to the next point or even higher. So if I was actually quick enough, if you actually went into the market just there, you could have got into that market for a trade this morning, say at 75, you could have had an order sitting there waiting, where they stop, say just below this previous swing at 68, or depending on how tight you want it. So it would have been a relatively low risk trade because the market stepped up. So if it did break it and came back down to the lower part of the trend channel, well, nothing ventured, nothing gained. You've got to put your money into the market at some point. But with that break above the trend channel above, I would have been more inclined to go into that at that particular point. So as it so happens, the market then breaks up. And where does it go? It's basically done, look at the distance of the trend channel. It's almost gone to the exact same distance up above again. All right, now some people might have said, all right, well, this is a point of where you would have probably taken off your trend channel once you'd broken above it here, because it's all right, well, now we've got a new slope, and they might have said, all right, well, that's no longer the slope in play, and they might have said, all right, no, I don't like that anymore. I'm going to draw in a channel that way. There's nothing wrong with doing that. You can always draw in more channels, but was that a particular slope in play? Was it providing support and resistance? So in this case here, we've come back up, and unfortunately I've missed the trade. So my entry was back down here. I don't have an entry up here. Yes, I would like to take a long trade, but there's nowhere for me to actually get in. So I just basically kept on doing my analysis, but I left this trend channel on the chart. So lo and behold, what happens later in the afternoon? Previous support comes in and finds it once again. All right. And then we managed to do a little bit of a bounce and then come up. But it depends. It depends on which way you look at this. You may have, from different charts, may have been actually able to take this short trade, but you may have been looking to see where possible exit points or resistance in the market is. So that's what I'm trying to do by not removing my trend channels so quickly. Yeah. So then you can see what will happen now. We've basically come in, found support, try to go a little bit higher. So I'd actually probably be slightly inclined to copy that again. And lo and behold, what's happening again? So do you think that's support and resistance coming in once again? So from what we've talked about, just looking at that, do you think this market's going to go higher or lower? You think it's going to go higher? Yeah. I agree. It is looking like it could possibly go higher. The only problem that we have here is we've got an area of resistance immediately above that the market hasn't been able to get above. All right. And we actually broke the bottom of our trend channel. Yes, we found support on it again, but this break of the trend channel below is a warning sign. So if the market's failing to push higher off known support areas, I would be very wary about going into a trade for an extended long push. All right. Yes, you could have taken a trade just here on top of the trend channel, but where is our immediate resistance above? It's very close. So do you think the risk reward on this particular chart, just looking at this chart on its own, is very enticing? No, it's not. Yes, we could manage to break and go higher, but the market has shown a change in behavior by breaking slightly lower. So I would be wary about going higher. By all rights, looking at this now, if that has found resistance one again, so we've stepped down in resistance again. So resistance, resistance, resistance. This looks like it's turned into resistance once again. So what's happened to our resistance immediately above? It's stepped down. So what do you think that then means about this particular lower trend channel? Do you think it's going to hold, or do you think it's going to break and go lower? Yeah, it's probably going to break. And all that is just taken from the context of our market geometry. So that's really all I'm about, is I'm trying to find what the current slope is, what the current ceiling and floor is from where the market's moving, and then how it's moving within that context to see whether it's showing strength or weakness. Happy? All right, so then we could move on to some other charts. I drew in this trend channel. I did these much earlier today, so it's all changed again now. But I know you guys are probably itching to take a trade. But if you're looking at this chart by itself, once again, I'll try and just move some of this stuff away. All right, so in this particular chart, on the 2-minute chart, thanks, Richard. I don't know if I'm that smart, but this is just my interpretation and from the way that I was told to read market geometry. I'm really just trying to find that place in the future from the angle and the slope that's working in my favor to try and give me the best risk and reward of getting into it. All right. So on this particular chart, if you were quick enough in the morning, you would have, so it's all right, well, you would have drawn in your A to your B. I think that's where I drew in that particular chart. So then this is giving us our current context or market slope. So then you would have done a copy of the line, and at the moment there's nowhere, you could have maybe copied the slope to the top of this trend or these swing points here if you liked, as a possible resistance point in the future. But at the moment, just looking at this chart as it stands, off drawing in a pure channel, my current floor is down here and my current ceiling is up here. You guys happy with that? So then we, as the day progresses along, all right, where we're finding resistance, it's broken above it slightly, but only ever so slightly. That doesn't mean that I'm going to change the trend channel just yet. I would probably copy in the sliding parallel and then see, all right, well, if you actually look at it, it would have been support and then support all the way through here. So it's turning into a support point. All right. But really we're going sideways. If you look at this, this is when really the US is closed and then coming into the Asia Open. And all we've done is just low volatility. We've just ground sideways. But what have we done? We've come back and we've come to our lower trend channel. Now, is this a trade entry? Again, it depends on how aggressive you are. Well, we broke slightly to the upside, but all we've really done is just, if we zoom in on this chart, all we've done is the horizontal red lines, they're Dan standard lines from the peaks in volume. So if you're actually looking at it, it draws in there automatically from the spikes in volume. So I like to use, this again comes into play, is I really like to use these as part of my tools to use in my trend channels, all right? What happens quite often is, for example, if you take this particular spike in volume here on the way to the downside, yes, it did come down and test it here. But what have we done? We've basically come to test this high volume point. And it actually happened to be right on the trend channel as well. Remember, we actually drew this out a lot earlier. I said you could have actually drawn it in much earlier if you wanted to there. So depending on how aggressive you were, you could have taken a trade here, and maybe if you wanted to have a stop, maybe had it below the swing low, or I probably would have in this case had a protective stop below the green line or that peak in volume. So is our trend channel working? Yes, with support. Now don't be too concerned on occasions where you actually get a slight dip below the trend channel. All right, it's the bigger the time frame you go into, you're going to get, it's not going to be perfect. You're just trying to look at the overall trend to give you that idea. So then we're saying, all right, well, what's happening? Is the market's coming along for the day? Where we found support again. Excellent. So what's the trend on this market? Even though it's gone sideways in this quiet overnight period, it's still really to the upside. We've not shown any real weakness just yet. So I've copied in a sliding parallel there, and then we said this is when I've come to the market in the morning. So I would have drawn in my sliding parallel line, and then I would have copied it and then said, all right, well, this is now my new point that I'm looking for. So I've got it's a very tight floor, so I've just got my support floor down here and my ceiling is up here, and then I'd actually be looking maybe at the midpoint up here as my next ceiling above that. So as it happens, basically we're a little bit of sloppy action, but if you actually copy that trend line, you'll actually find that it actually managed to hold it quite well through here. And if you actually project it all the way back, see how it even goes off the previous spike low down here. So are you guys starting to see the importance of leaving a trend channel on a chart for a longer period of time? If you get that angle correct, it should work into the future to give you those points which we're looking for. So again, on this trade here, if you're looking at this trade just in isolation, you'd be saying, well, where would you be looking at for your current ceiling? Well, it blasts through the midpoint like no tomorrow, so that didn't even stop there, but you're expecting it to be stopping on the other side of the trend channel, which it did. All right, so then we're finding resistance up above again. So because I'm finding resistance perfectly again, that's telling me, well, my market angle is still very good. So do you think I need to look for a new angle yet? No, I don't. So I'd just keep it on the chart. So I'd be saying, all right, well, this midpoint didn't really act much as support previously. So would you guys expect that to act as support now? So where would you expect support to come in now? If you had to make a wild guess, where do you think the support would come in? So your current, the dotted line, the black dotted line, so that was our previous resistance point. So then we'd be looking to come back to then see if the market could then find support. So we've come back up, we're just testing the top of this trend line. So we've stepped down ever so slightly. So by this stepping down is a slight sign of weakness. So with that slight sign of weakness, I would probably expect the market to go lower. That would be my prediction. And where do we go? We end up grinding sort of sideways to a little bit lower, and then come back into these high volume lines that we've got in these previous spikes in volume, those extreme spikes. That's when we get those lines. So we've come back. We haven't quite got to it, but it was at least an area that I was expecting some support to come in. But it actually came in a little bit earlier, and then the market's gone higher. So now where would you be expecting the next resistance? Where is your current ceiling? So you would be expecting your next ceiling to be the top of this trend channel here, or maybe even slightly higher. So depending on how you trade and your other markets, you would then decide, well, am I going to get into this trade? And what do we end up doing? We end up, and look at that. Where do we find resistance once again? Exactly on our trend line. So then we bounce off that, and then we say, all right, well, we're coming lower. So now, if you really wanted to, you might have said, all right, well, I'm going to move my trend channel line maybe slightly higher because that's where my previous support was. But that's the beauty about market geometry. If you get the angle right, it works for a long time. So it's just practice of trying to find what that angle or slope of the market is. And if you can do that, and you can see how it's moving in that slope up or down, it's actually telling you, well, is the market strengthening or weakening? And we're doing this on a 2-minute chart. So remember, the lower you go in time frame, you're going to get a lot more noise. So then we actually breach slightly below it. So that's maybe a little bit of weakness starting to come in, that we've breached that support line. So I'd be thinking, well, maybe we actually wouldn't make it to the top of our trend channel again. If you'd tried to go for a long here, depending on how tight your stop was, because that would have been, it looks like if you'd got in at that trend channel line at say 23, if you had an order sitting there, you would have had a stop, say, below the previous swing down here. So maybe even at 17, so a 6-tick stop. So in this case, even though it breached the line and went lower, the market then still went slightly higher again. But as soon as you came up to here and got this spike on that particular candle, I would have brought my stop to break even. Yeah, but remember I said we broke this line, so that's our first sign of weakness coming into the market. So then what happens? We can't reach the other side of the trend line. So we're expecting the market to go lower. So we're not expecting that to hold. And I'd be looking at the bottom of the trend channel again. So in this case, it didn't hold. It's just broken all the way through it. So you could then say, all right, well, then you start to look for a trend channel again. All right. So at the moment, as it stands, you could possibly draw in a trend channel through here. Depending on how you look at it, this could be a wave 1, a wave 2. This would be your wave 3, and then your wave 4. So what I've basically done then is drawing from point 2 to wave 4, then it's giving me a possible target into the future down here. But I'm not really in love with that slope, to be honest. Come on. I normally like to do it off so that if it snaps back, then I actually know that the trend channel is actually working. You know, a bit like that, eh? Okay. Actually, I'm going to have to It's not playing nicely. So all I've done once again is I've just copied in a particular slope. But to me, there's nothing convincing. Do you guys think that's a convincing line? No. So if it's actually not proving itself, so the actual angle doesn't look, so it's all right, well, I'm actually not seeing anything here. So if it's actually not giving me the market geometry that I want, there's probably no point in having it on there. So you could have said, all right, well, if the top didn't work, well, let's try from maybe the bottom. All right. So now this one's a little bit more interesting. So what have we done? We're basically through our trend channel here. Again, there's a little bit of market geometry there with the slope, and we're coming out to, in essence, the warning line. But it actually looks like it's going to probably break up and out of it. But there's nothing really clear. Yeah, it's if you actually look at this whole area, it's really just sideways. We're just sort of grinding sideways for the moment. Okay, so that's that chart. So then let's look at some other charts that I did to try and give you some examples. So let's have a look at all right, so now I've put on a 60-minute chart and the 9,000 tick. So what I did with this particular chart here, the 9,000 tick chart, is I drew a trend channel. Okay. Now, normally in an upslope, I would normally draw it from swing lows to another swing low, etc., to try and give me the geometry that I'd be after. But in this particular chart, the way I saw it, I couldn't actually find a slope that I liked off using swing low points. So what I did is I actually says, all right, well, I'll use this particular swing high here, this particular swing high here, and then I moved the bottom of the trend channel down to this swing low here to then give me my market geometry or angle of the market. So then once I did that, then basically I just copied the market angle and then I moved my trend line around to see what was in play. So from what we've been talking about, do you guys think this is a good fork or a bad fork? Or trend channel, I should say. Oh, that's good. So why is it good? So if we move it around, now remember I said when you go into higher time frames, the market may be a little bit sloppier around your trend channel lines, but as long as it's fairly close. So in this particular point here, so we had resistance, we've had support, sort of a sloppy little bit of resistance there, coming back into support, sort of messy, trying to find support there but failing, turning into resistance, and then before going higher again. So that's all I'm doing. I've just copied my line and I've just moved it around and I've moved it to different swing high and swing low points and see if it's in play. Now remember what I said earlier, I prefer lines that actually find support from above or below, because that generally means that you've got the slope pretty good or pretty close to the current market action. So it should work further into the future for you. So that's all I've done. So from where we're at on this particular tick chart, All right, so we came down, we broke down, and we went down towards, if you really want to, you could copy the line once again. But in the slope or angle of the market, yes, we broke through the bottom of the trend channel here, but the actual angle still played, and it was confirmed really by this second swing low here. Because they were still in the slope of the market, it means that all we'd done is we had just done a phase shift from this current area, from that swing high and swing low, we had just done a phase shift down lower. So would you be saying, all right, well, which way is the trend? The trend is still, even though you've broken lower in the trend channel, is still to the upside. But where would you be looking for your first signs of resistance? You would be looking for resistance up in this area here. So then it does find resistance. So then we say, all right, well, the market then comes off. And then what happens? Off our quartile line, or the midpoint of our channel line, it's actually found nice support again. Once, twice. And if you, depending on the type of trader you are, you may have decided to do a long position here with a stop below here. So in this case, going off a very large chart, so if you'd done it off that quartile point, so you might have been in at 44.10 and maybe had a stop at around 43.94 or 5, something like that. Hang on. Yeah, I draw in the different pitchforks to see which one could be in play as well, Bobby. But in this particular chart, I couldn't find a pitchfork that I liked when I was doing it this morning. I just marked up my charts throughout the day, try and hopefully be able to show you guys something for the evening. So then I could move on and say, all right, well, what did I draw on my 60-minute chart? So on my 60-minute chart, you can actually see it actually goes back almost to the beginning of the month. So was there really a need to change or draw in a new channel if it's working? Well, for me, there's not. Right? So you could have drawn in, if you were doing this hard right edge, you might have drawn in this here, or you could have actually, that's probably quite steep up there, but probably after this point here, you may have been looking this as a new trend channel point. All right. So just because you've had a scream to the upside doesn't mean that you don't in the future come back and revisit previous swing lows and then draw a trend channel off it. You draw your trend channel, then you copy in the angle of the market, and then you start moving it around. So I would have then drawn that and then says, all right, well, moving around, I know we'd be at this point in the future, but did this market slope show that it was actually working? Well, yes, it did, because we had support, sort of a little bit of messy support and resistance through here. Resistance, and at the moment it's at a support line. Okay, and same thing up the top, even though it broke much higher, we've got resistance, turning into support, and then support again before it came back down, tried to find support and failed it before coming back down to this point here. So again, I would just keep this on the chart and saying, all right, well, as we're going forward in time, what is my current ceiling and floor of the market? Okay, So from where we're at, I would be saying, well, this is my closest floor and my closest ceiling is here, and then probably not that one there because I don't think that's anything off that. Maybe that, but that's probably projected more off a line in the future, but I'd probably say this point up here around about the 43.23. So they're the 2 points that I'd be looking at to say, all right, well, what's the trend of the market? Yes, we've gone screaming up, we've come screaming down, but what is it? Is it up or down? It's still really to the upside, isn't it? So if the trend is still up, which way do we want to trade? We want to trade really in the direction of the trend if possible. Okay, so you would be looking to find entries on your current support floor going up to your ceiling. So in this particular case here, it didn't quite get to the upper point, the trend channel point on there, so I'm expecting it to come back down. So now I would be maybe considering an entry around this point here. So if you did take an entry around this sliding parallel, depending on how close you want to draw it, so you may have had an entry, say here at 32, and depending on how aggressive you were. Remember, when we go to larger time frame charts, if you're using the swing point or one of Dan's spike in volumes, they're going to be further away. So you're not going to get as tight a stop as you would on your lower time frames. So you would have to accept having a larger stop. So if you did do it there at 38 and maybe having a stop down there, so that's quite a big stop. I don't know, for me and the way I trade, I probably wouldn't take that. That's just too big looking at the 60-minute in isolation. But what I would have done is I would have then gone down to my tick charts and my 2-minute charts to see if I did get an entry at that point. So actually, just out of curiosity, I don't think that'll be too far back. It's 20th. No, it won't be. Sorry, I won't have that on the lower time frames too far back. But this is, on this case here, so we came down and we're finding support. This may have been another chance for you to try and find another trade to the long side. We've got one of Dan's spikes. You could have said, all right, maybe get in with a flush below the spike in volume to try and take a trade higher. But you can see how it's a lot more difficult to just take entries based on high time frames. But it does, it turns in, and then basically our previous support and resistance line turns in, once again, in the future, our area of possible resistance. It faffs a little bit around there. You may want to have tried to copy it. So what's happened in this market? It's stepped up, hasn't it? So you'd be then looking to say, all right, well, where's your current ceilings and floors? I would be looking at a floor down here, and I would be looking at a ceiling either there or maybe slightly above it, just there. They would be the current ceiling and floor that I would have in play. So then as the market goes on, you can see what happens where your support turns into resistance again. All right, this isn't the cleanest chart for the angle that I've got, but I'm just trying to really show you the concept. But you can also see again here, support turning into support again. If you did want to take a trade, you could have possibly done it off this particular trend line and then with a tight stop. So you wouldn't have done it on this spiked down, but you could have maybe tried for an entry back here, say around the 69.70 with a stop down below if you wanted, or having a cash stop of 10 ticks, 15 ticks, whatever you're prepared to risk. But in this case, it failed, and then it's moved lower. All right. So that's it for the 60-minute chart. So let's see if I can give you another example of, well, actually just finishing off on that. So what we've actually done at the moment is you can see off the current support and resistance, where's our current support floor? It's through this particular white dotted line. So that would be our current support floor, and our current ceiling is just up here and then up above that a little bit higher again. So they would be the points of interest that I would be looking at in the future. I'm drawing my trend channels and to get my market slope, and then trying to figure out what my current ceiling and floor is, and then try and figure out what the context is. So does that help you guys? I think you guys are starting to get the hang of it, and just go out there and draw your trend channels, and I hope it helps you in your trading in the future.